Welcome to the All Financial Hour podcast with Steve All.
Our pal Warren Buffett officially retired at the age of 95. And before stepping down as CEO of Berkshire Hathaway, he moved a lot of money over to cash. I'm talking about $373 billion. Turns out a lot of people do the same. They retire from the workplace, they dial back their risk. But Steve, I wonder, does pulling out of the stock market just create really a different type of risk?
Well, if you know somebody that's got a couple $1 billion sitting in cash, they need somebody to talk to, please give me the referral. We'll go that route first. But you look at it for moving to cash. Warren Buffett's investment philosophy was completely different. He was not a guy that was going to buy something today and sell it in the near future. He's a long-term investment type person. He's the kind of guy that if you're not willing to lose 15 to 20% on this purchase, don't buy it. And some people, that's beyond their comfort zone. So Berkshire Hathaway, completely different philosophies. But we have had people. I remember when Stephen Leslie came into the office. They had around $850,000 in invested assets, 63 years old, going to retire at 64. We need to go to cash. And it's like, whoa, what do you mean you need to go to cash? Well, we're not going to be putting any money in the bucket anymore. So we need this to last for the rest of our life. And that's when I started to look at it and I said, well, the problem with that is this little thing called inflation. It's going to cost you more to do the same thing in the future. So we can't go completely to cash because we need that portfolio to grow. And if we run our numbers, we usually run our numbers with about a 3% inflation and about a 6% growth rate. We believe that should be obtainable over the long haul so that it gives you the availability because inflation is going to eat into your portfolio. So we start to look at it when people start to look at getting cash, they get more conservative as we get older. So we look at it and say, okay, if we take all of your retirement income, pensions, Social Security, offset it against your lifestyle expenses, say you're short $1,500. Now we need to look at it and say, do we want a guaranteed income to meet that so that our portfolio, we take a portion of our portfolio, create a guaranteed income that we cannot outlive? Do we want to use part of that to make sure that our lifestyle is pretty well covered? And if you don't need the income, what about just protecting the growth? We have the options to do that. Protected growth, a fixed indexed annuity without an income rider. All we're doing is trying to say we want the floor to be zero. We do not want to lose money due to market volatility. So if you need income in that time frame, or if you're just looking for protected growth because you want to get more conservative as you enter your retirement years, give us a call now. Ask for that comprehensive retirement plan. Give myself and my staff the availability to look at your situation and find out what could be best for you.
And just a reminder, everybody's situation is absolutely unique and different. That's why this comprehensive retirement plan is built specifically for you. That phone number, 636-230-8824, 636-230-8824. You can also visit the website, yourmoneymattersstl.com. Americans are feeling pretty generous these days. John Bergdahl, lead analyst for Giving USA, says charitable giving continued to grow last year.
Charitable giving totaled $617.20 billion in 2025. This is the first time it's surpassed $600 billion, and this is a high in current dollars. It's up 5.7% from 2024, which when adjusting for inflation is about 3%.
Wow. Okay. Well, a large share of that giving comes from individuals, especially with those higher income households. But do you have to be ultra wealthy to make a meaningful impact through charitable giving? And of course, what about those tax deductions everyone's looking for?
The idea around it of it is with the changeover of the tax laws, with the standard deductions being so high, very few people had the availability to write off or give away money for charitable contributions for tax purposes. But in 2026, an individual who has $1,000, even if they itemize their deductions. So those records that you used to keep years ago, you need to keep them again this year. As a married couple filing jointly, you can do $2,000. And I think that's very important to look at. The other thing that I look at that you don't have to be a millionaire to do it, qualified charitable distributions. Once you hit age 70 and a half, you can start giving money out of your IRA accounts. It has to be done properly, and you do not have to pay taxes on those dollars. Then when you hit those required minimum distribution ages, that counts towards your required minimum distribution. So those are some of the tax things that we assist our clients with. And I believe that reducing or eliminating taxes is the greatest thing that you can do for your retirement years. If you got more than $500,000 invested, give us a call. Ask for that tax analysis so that we can look at your situation to see if Roth conversions or charitable contributions could be advantageous for you.
And again, this tax analysis is complimentary for those that have at least $500,000 saved in investable assets. Call today. That's 636-230-8824. 636-230-8824. The website, yourmoneymattersstl.com. For the last few years, it felt like Wall Street was being driven by just a handful of giant technology companies. But investment strategist Stephen Parker tells CNBC that's changing thanks to healthy broadening in the market.
The conversation that we were having back in December was this is all about the Mag 7 and the hyperscalers. And then look what's happened this year. The Mag 7 is down and the market continues to move higher. Well, it's all about the tech sector. And then we saw disruption in the software space. And now we're seeing a big pullback in semiconductors. And yet through all of that, the market is near all-time highs because we are seeing a broadening. Earnings are continuing to deliver. A lot of that is tech. But you look at industrials, utilities, financials. This is a broader story. And that I think is really healthy.
Well, here's the deal, Steve. I mean, most of us, we don't have the time or the desire to keep track of all these market shifts. Isn't this really a big reason to work with a financial advisor like yourself?
Yeah, I think it's great to have a financial advisor, but we also look at it, who's behind the financial advisor. Our idea is to be financial planners and then bring in the tools that are necessary to get you where you want to go. One of those tools is investment advisors. We go beyond that. And I like the fact that through Market Guard, we have the availability of ETF portfolios, stock portfolios, static or tactical management, more buy and hold, adjust for drift, constantly moving throughout the year. Those are different types of things. And the thing that I like too is I can get aggressive, emerging technologies, blockchain, sector rotation, or I can get moderately conservative or conservative. I can also look at it and say, what if we just want income? What if we want a dividend portfolio? And I think that's the thing is the most important is having more than just one option available within a person's portfolio. So then we look at it to sit here and say, what do we do for our more aggressive investors? And what can we do for our more conservative investors? So I think it covers both of those in the investment side. And then we're holistic. We also take care of it on the insurance side. Do you need life insurance? Do we want to make sure we pass money on to the children? A life insurance policy is one of the best ways to do that. What about long-term care? Have you thought about that day that you might not be able to do something and you or your spouse might need that kind of care? Have you looked at how you're going to cover it that way? Annuities, asset protection. I don't want to lose money due to market volatility, or I need guaranteed income. So we look at it to the point, what do you need? One of the things that we've used tremendously is a lot of people say, hey, Steve, the market's up. Can I lock in the gains? And I say, yes. We could then shift a portion of your funds to that fixed indexed annuity, pull out that 10% free withdrawal every year, dollar cost average back into the market. We have the availability to do what most people want to do. We can get you on the investment side. We can get you on the insurance side. Give me a call now. Ask for that comprehensive retirement plan. Allow us to look at your situation and figure out what would be best for you.
Again, for this complimentary comprehensive retirement plan, call today. And remember, everybody's situation is different. This is a customized retirement plan. 636-230-8824. That's 636-230-8824. Congress continues kicking the Social Security can down the road. And just a reminder, the deadline to fix the program's trust fund is 2032. So all that aside, there's got to be some bigger and better things that we can be doing now to improve our retirement outlook, no matter what happens with Social Security, Steve.
I think Social Security optimization is the most important thing. As a single person, it's a little bit simpler. We look at it and say, what's the break even? The break even is around 80 to 80 and a half to 81, depending on the situation. So the break even's pretty well simple. How long are you going to live? But I think the things that we got to be careful about, taking Social Security too early. What about taxes? Is your portfolio, is the growth sustainable? And look at the surprises that are going to come out there. So if you're over 59 and a half, I'm going to sit here and say it's a great time for us to do a Social Security optimization report. Now, that Social Security optimization, I have to gather the information. I have to be able to look at what you currently have to see if you can delay taking Social Security. I can't just run it in a vacuum. So give us a call now. Ask for that Social Security optimization. I am going to let you know we do need all the information to be able to help you with that. So give us a call now. Ask for that Social Security optimization report so we can look at it for you when the best time for you to file for Social Security could be.
Exactly. It's just one of those puzzle pieces when it comes to creating that retirement plan for yourself. Again, 636-230-8824. 636-230-8824. Well, if you're still working and you have your spouse on your health plan, you're probably paying between $600 and $700 a month. So you might assume that in retirement, once you're both on Medicare, that your costs will drop. But I'm going to give you some numbers here. 2 people on Medicare at the base level run about $410 a month. And then you add the Medigap plan, and that's another $200 to $300 a month. So now you're right back to where you started, that $600 to $700 range, Steve. Does this usually surprise your clients?
I would say yes. I'd say the biggest one was a person that came in on the planning side of it, and he had to keep his income below the limit for the Affordable Care Act. And I said, you borrowed the money to be able to do this? He goes, yeah, because then when I get to 65, Medicare's free. And I went, Medicare's not free. He goes, oh, yeah, it is. That's a surprise for a lot of people that Medicare is not free. Now, let's talk about what you did. That normal, about $410, that's for a couple. And then you get the Advantage plans or you get the supplemental plans. The Advantage plan, if you're going to go that route, it is usually no cost per month. But when you use it, you're going to have deductibles, you're going to have co-pays, and it comes in that, kind of like the insurance that you've got now. Then you get over to the supplemental plans. If somebody has a supplemental plan, they are paying a premium every single month, as you put at it, $200 to $300 a month. Plus prescription drugs, if you want that on that. And that's where I start to look at it and people go, well, that's a lot for insurance. And I'm going, yeah, because your company might have paid all of it for you. The average cost to cover an employee now is between $2,500 to $3,000. With an employee and their family, the average cost is $2,500 to $3,000. So for somebody like myself coming off of a plan that I had to pay both of them for, Medicare is a lot cheaper than what the other plan was. So that's where we start to look at it. It's never going to be cheap. It's always going to go up in price. Inflation in that area is very high. So that's why we come in. I don't do Medicare. I have a gentleman, Scott Stream's been doing my insurance for me for 20, 25 years plus. And I like the fact that Scott takes care of my clients when I send him to on the Medicare side of it. On September the 25th, Scott will be coming into the office. We do a Friday event, coming into the office to talk about Medicare, to talk about the difference between the supplemental plans, the Advantage plans, Part D for your drugs. Give us a call to let us know that you would like to come. I know it's up. Save the date for September the 25th. Give us a call so that we have an idea that you're coming into the office that day so that you get the information from the experts. I know about it, but I'm not going to keep up with which plan is the best for you at this time. Give us a call. Ask for a reservation to the September the 25th Medicare with Scott Stream.
Again, 636-230-8824. That's 636-230-8824. More details, of course, at yourmoneymattersstl.com. Also in September, Steve, you have a very, very important personal event that we want to tell our listeners about on September 12th, right?
September the 12th, St. Jude Walk here in St. Louis. It's in Creve Coeur Park. If you'd like to become a part of the team, I haven't got it set up on mine, and the easiest way to go is Steve All, and that's STEVEAUL. Go on to that. You can sign up for the team. You can make a donation. I do match the donations up to $1,000. So if you'd like to make a donation to St. Jude, remember, keep the receipt for it because you get that extra $1,000 this year on your charitable deductions, even if you don't itemize. So give us a call.
Thanks for listening to the All Financial Hour podcast.
Insurance products are offered through the insurance business All Insurance Group, LLC, AIG. All Financial Group, LLC is an investment advisory practice that offers products and services through Impact Partnership Wealth, LLC, IPW, a registered investment advisor. IPW does not offer insurance products. The insurance products offered by All Insurance Group, LLC, AIG are not subject to investment advisory requirements. IPW and All Insurance Group, LLC, AIG are not affiliated companies. Investing involves risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims-paying abilities of the issuing carrier. This radio show is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual's situation. All Financial Group, LLC is not permitted to offer, and no statement made during this show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by All Financial Group, LLC.
This radio show is intended for information purposes only.